Hello, welcome to Civil Discourse Now. I'm Mark Small. I co-host this program with Paul Ogden. We're both attorneys here, filming this in Indianapolis, Indiana, on a beautiful day in September. I know it's October now. I don't even have track of time anymore. Our guest today is Sean Shepard. He's former congressional candidate for the Libertarian Party, and also former assistant state director, or associate state director? Assistant state director of Americans for Fair Taxation. The two topics we're going to discuss today are fair tax. It's going to be in the first two segments, and the second two segments, the last of our four, are going to be about the Federal Reserve System.
Mark, the show Civil Disobedience Now.
No,
sorry.
That was what I wanted to call it.
Civil Discourse Now is a show that tries to bring rational and reasoned debate to local, state, national, international political issues. We're trying for a format where we don't have people talking over each other, but we have rational discussions about the political issue. I would also add that today we're shooting from Big Hat Books.
That's correct.
They have a number of fine volumes downstairs for sale, a small retailer of books, including Mark Small. I think you have a book, do you not?
Crime Pays, a fictionalized account of a Ponzi scheme that actually occurred in the 1960s in mid-north Indiana. They have an excellent selection of books located at 6510 Cornell Avenue in Broad Ripple, right across from the Monon Trail. And it's a wonderful place. And the space up here also is available for rent for special occasions.
I would also add, too, that Civil Discourse Now is a show often where we're also learning about political issues. Last week, 2 weeks ago, we had a local political activist, Pat Andrews, on who talked about the TIF and talked about budget issues. I know Mark and I learned a lot about the tax increment financing districts that are in Indianapolis. And I think we're going to learn a lot today about a subject I don't know a lot about, Federal Reserve, subject which will be very informative, I think, learning about that. And then the other subject, of course, is the fair tax, which we'll hear from our guest about.
Sean, tell us about the fair tax.
I
assume that's not a tax that supports the state fair.
No, it is not. The fair tax is legislation that gets introduced in every session of Congress that would essentially replace all federal taxation. So your income taxes, personal income taxes, your FICA, your Medicare, Medicaid taxes, your corporate income taxes, fuel taxes, anything taxed at the federal level would be completely replaced with a single rate point of sale tax, basically a sales tax, which people are used to in roughly, I believe, about 46, 47 states already at their state level. So basically, when you go to the store, when you bought something, a brand new good or service, you would pay the tax on that. This would be different than having all of these myriad different taxes that get collected in different ways. And to where nobody ever really knows exactly what they paid in taxes for the year. One
question, I'll have a bunch of questions probably, but one question I have initially is, here in Indiana, in our sales tax, we exempt certain items, food, for example. I know when I lived in Illinois, they exempted books from sales tax, which I think is an interesting contrast between Indiana and Illinois. Is there any kind of provision for that, exemptions in the fair tax?
Rather than provide exemptions, what the fair tax legislation does is it creates what's called a prebate. And the intention behind this is that based only on your family size. So the government no longer needs to know how much money you made, where you made it, whether you lost money or made money in the stock market, what deductions you're taking, all these different sort of things. They only need to know your family size. And based on that, they would issue what's called a prebate. Everybody would get this, again, regardless of income, because they don't care, it doesn't matter. And the idea is to zero you out up to poverty level spending based on your family size. So for a family of four, that might be around $27,000, $28,000 a year. They would get a check for roughly $475, $500. The intention being that if all you made was that much money and you spent all of it on necessities, room, shelter, utilities, food, that you would be zeroed out. Now, what's great about that is that so essentially if you're in the poverty level below, you pay 0%.
How's this different? How's this different from a negative income tax?
From what perspective?
I think functionally.
Functionally, for it to be a negative income tax, you would have to earn far below poverty level spending.
I mean, so under the fair tax, a person makes zero. Nothing at all.
If they're not making anything,
Yes.
then there's potential that they could receive a few $100s each month,
Based on what?
just based on their family size.
Okay, but a single individual.
Because the government isn't going to know or care how much money you make. They're going to say that if you are living at poverty level or below, we're going to zero out your taxes. Now, and the way this works is that if you make, let's say you make and spend $1,000 more than poverty level spending, your effective tax rate would be something like 0.18%. I mean, it's less than 1%, it's very low. If you make and spend, say, $100,000 more than poverty level spending, then your effective tax rate would end up being something around 18%. Now, it's just a trick in the math, because the idea behind this is that it maintains some progressivity in the taxation, but it doesn't require that people who are poverty level or below have to pay taxes on food. Because once you start putting exemptions into things, then it becomes a free-for-all. We've got that now. I mean, we have 40,000 pages of tax code for a reason. And a lot of that is because everybody comes to the trough and says, well, we've got a special subsidy for housing, I want a special subsidy for green energy, I want a special subsidy if people buy the right brand of baked beans in such and such part of the country for whatever program. And you end up with all these exemptions. The idea behind this is that instead of having this free-for-all where everybody's competing for the exemptions, which once you put in there, your tax rate would have to be 50 or 60%.
Right, but when we're looking at somebody who's, and I'm just looking at, say somebody makes no money, and I'm not talking about somebody who's, leave aside somebody who's disabled, somebody who's crippled, whatever. I'm talking about somebody who's 25 years old, capable, full, able-bodied, doesn't want to work, and that's not the typical thing. Most people want to have a job. Let's say it's somebody who just doesn't want to work at all. They're still going to get the basic level of...
Theoretically, they would still get the rebate check. They would still have to report their family size or household size to the government. But at the end of the day, that's not something that they're going to be able to live on.
Well, would we still have... Does the fair tax disavow any concept of there being welfare programs? This is just a revenue.
This is just a revenue generator. This doesn't have anything to do with spending, doesn't have anything to do with welfare reform. It is just a difference in how we collect revenue. Just a simplification.
Sean, let's talk about the rate they're talking about. I read some materials and I thought it was 23%, but reading it more closely, they're talking about 30% rate.
Yeah, and when we're comparing this to, let's say, an income tax, you have to use the 23% rate. Because for every dollar you spend, you will have paid 23 cents in tax.
Okay.
Now people go, wow, that's an awful lot of money. But for every dollar most people make right now, the government's already collecting 20, 25, 30 cents or more. So you have to put it on an even playing field. So yes, it ends up being a 30% additional cost, but if you compare it in the same way we look at an income tax, where you make $1,000, but you only get $700 of it in your pocket to spend, well, they've already taken that bite. The difference here is that now you're able to earn that money and you're able to spend it before being taxed on it, save it before being taxed on it. So if you're pooling capital, let's say to buy a house, buy a car, and start a business, it's a lot easier to do that, a lot faster to do that.
Well, let me ask you about, there was a story recently about cigarettes, how cigarettes, of course, have a special tax on. I don't smoke, so I don't know how much it is per pack, but they're very, very expensive now primarily because of the tax. And the story talked about how there are these centers opening up all over town where people can go in and roll their own cigarettes to avoid the tax and get the cigarettes much cheaper. So they actually go in and physically roll the cigarettes themselves. They're trying to avoid a tax, a high tax with cigarettes. Why wouldn't people try to avoid a 30% on top of the state sales tax of 37%? Why wouldn't people try to avoid that?
Well, one of the great things about this kind of tax is that it has a built-in barrier to excess. Actually, in Federalist 21, Alexander Hamilton actually spoke about this. Says if you're going to have this kind of taxation, have a consumption tax, because as the rate increases, people will close their wallet in protest or say, well, it's not worth it to me because I have to pay the extra tax.
And he also said in that same Federalist paper, he talked about excise taxes on alcohol and tobacco. He viewed those as being luxuries and pleasures that should be taxed. I'm sorry.
So see, we had sin taxes even back then. We discovered. So the idea behind that, though, is that it creates that right now you don't have a choice, right? The legislators that get elected in popularity contests because they have nice hair and teeth and they sound good get elected.
Like us.
I thought they got elected because the people didn't like the other person and thought that they weren't. I thought it was kind of like lesser. Never mind. I'm sorry. He was disillusioned. Some of my misconceptions.
I'm sorry to burst the bubble. They get there and they decide what it's going to be, and that money is forcibly extracted from you because you don't have any choice. And if you don't pay it, they show up with guns and they take it. They take your property, they take your liberty, they put you in jail, all these different things. With the consumption tax system, you have to hand the money over. And if you decide that you don't want to pay the tax, you don't buy something. Now, one nice thing with the fair tax is it does exclude used goods. So everything that's taxed is a brand new good or service. So everything gets taxed once. So you just have one layer, and then once the item's been taxed, it's done.
So if a person though lives, say, in Michigan, and they live across the Detroit River from Windsor, Canada, if they can buy the goods more cheaply over in Canada, they can go right across the border and bring them back in.
Well, but what stops people from doing that now? I mean, you have differences in the sales tax rates between states, and certainly in a large. The states they've already have to address this anyway, because you do have the potential for an underground economy or a black market economy. You do have
it's called the internet.
Well, and it's worked out pretty well because it's been a tax-free zone largely on the internet since it started. But that was done. That was done intentionally to spur growth in the internet and the new economy. You've got most of the states already have systems in place for collecting sales taxes and for catching fraud or having residency requirements or reporting requirements on things.
Yeah, but we don't have any states that have a sales tax as high as 23 or 30%.
What happens if I want to go out and buy a new big screen TV that's going to cost $1,000? Why wouldn't I buy it from someone off the back of a truck and save myself $300 or $370?
Well, but you can do that now. You can buy a TV from someone off the back of a truck and save yourself $300. The problem is you're just probably making an illegal purchase.
Well,
the same thing would apply.
That's unfair. You don't know that.
But the higher the tax is,
You're just mad because I didn't want to buy your TV.
the higher the tax is, though, the more likely they're going to buy it off the back of the truck.
So let's say that
7%, it's like, it's not worth it. People don't even think about the sales tax now when they buy things. They will think about the sales tax.
I disagree. I think every time I go and I buy food and I pay the 7% sales tax.
We're right at the end of the segment. I'm sorry to interrupt, Sean. We'll be back in just a minute.